So that's one view, the Morgan Stanley view. The other view is that we're bouncing back. Some of the key names in particular, like Apple, also Amazon. Does that make you think that the tech pullback is over?
I think you're really at a tough juncture in the market because you've got two things going on at once, which is you had the fastest move down in history for the NASDAQ from an all-time record high to down 10%. That happened in just 3 trading days. The prior record was, during the COVID crisis. That actually happened during 6 trading days, and you have to go all the way back to the late 1990s. The prior record was 11 trading days. So this move down in 3 days is the fastest in history by a long shot. So you'd expect some kind of bounce off of that. But, to Morgan Stanley's point, valuations are at record levels, which is why picking a floor is very, very hard. And that's why, when I've been on these interviews with you before, I'm like, you have to be nimble. You have to trade around your positions. And, we put out a tweet on, I think, September 9th or so, or 8th, saying, we had covered over half our short positions, but we were still sitting on 30% cash. Since then, we've covered even more of our short positions, and our cash position, though, is still at 20% because you've got all these conflicting forces where we might not get a phase 5 stimulus package on the other hand, right? And that's bad. But if we do, that'll be really positive. So I think you have to be very flexible at this point with markets.
I guess it's a difficult question to answer, but do you expect the stimulus bill to get over the line? And what would that mean to the market? 5% jump, 20% jump?
Yeah, no, that's an excellent question. Before the unfortunate passing of Ruth Bader Ginsburg, I thought for sure we would get a phase 5 package because, as I've said on your show before, I felt like it would take the market really going down hard for politicians to be forced to act like grown-ups and come together with something that's good for the country. And I felt like we were almost there. Now with the Supreme Court fight on, I think you're back to both sides not wanting to compromise. But if we do get something, this market has been driven by stimulus the whole way up. It's about 30% of GDP between monetary and fiscal stimulus. And we've seen what that's done. The market's up year to date, even with this drop, which is incredible given we're still in the middle of this pandemic trying to get through it. So I think it could be good for easily a 5% to 10% move on the upside, potentially if we get it. But, remember, the Fed is backing off of their balance sheet expansion. That expanded to $7.2 trillion in the middle of June. It's actually down $150 billion since then. And we've mentioned on the program before, when you've had that, the markets really struggled in 2011, 15, and 18 during periods of time. So, that's why we're trying to be, very nimble, I guess is the best way to put it right now, and moving into some lower volatility names on the long side.